Okay, right, loud and clear. All right, let's begin. Let's go. Recording, continue. Here we go. Okay, guys, good morning to all of you. Once again, today is Monday, and we are going to be ending our month of June in just a couple of days, and we're going to welcome, in fact, this July month. All right, July is going to be a very interesting month. Now, today, this MAO is going to be very interesting because we're going to have many information about what to look out for July. For the bulls, this could be very happy for you. Now, of course, for the bears, you also have something that I have prepared for you. So today's MAO going to have loads of information for the bulls and the bears at the same time. All right. Good morning to you, Mavis, Mandy, Gary, Eddie. Right. Good morning to you. Let's just begin our morning MAO right now. All right. Loads of stuff. Very powerful stuff. Okay. All right. Let's start first. First of all, we can see that, right, today's caption is inflation at 30 years high. All right, now this is based on the PCE data. Now, PCE data is the one that Federal Reserve love to use. Now, back then, when we talk about the CPI data, they totally ignore it because they don't think that that is the one they're looking at. So they tell the whole world that, you know what, CPI is not what I'm looking for. They say, I'm looking at PCE data. Okay, the world buys it on that moment. Now, PCE data is at 3.3% to 3.4%. It's way above the 2%. They're like telling you, okay, you know what? Doesn't really matter. This is transitory. Now, this is something that, you know, like husband and wife, you should have this thing. When the husband tried to, you know, cover some tracks and stuff like that, the wife say, okay, I can give it to you by now for this excuse you gave. But if that something else happened already, right, and there's no more excuse, right? You know, if you say that, no, actually, this is not what I'm looking at. I tell you, man, the wife will be very angry with the husband. Agreeable? Those who are in any boyfriend, girlfriend, or wife-husband relationship, you would know that, right? This is something that you cannot say. When you have said something earlier, you cannot go back your words, right? Correct. All right. Those who agree, please key the word agree right now. So, of course, for people, the investors are all looking, hey, come on now PCE is at a high. What do you think? But they say, no, it's just transitory. It will not affect. Anyway, it will come down later on. So that is the question here. So can this bull market continue? This is going to be very interesting. And let me explain to you more with my personal finding now. Okay, so what you happen, I can see that morning to you, Ching Hui and Eric. Okay, Eric's the only one that agree. Are you the only, is that Eric's the only one that is married? Okay, all right. Or you don't have this problem before. Okay, before we start this morning, once again, we would like you to understand that disclaimer as usual. There's so much information I'm going to share today. So I need you guys to be very clear and understand where I'm coming from with regards of my sharing and my opinion, okay? All right. So once you have read this, you have accepted the above and identified me. Okay. Thank you, Janet, for also agreeing with that. Now, this is the inflation chart that's going through the roof. And if you take a magnifying glass, you may actually see a little drop. This is a joke, okay? You see, yes, I knew the price can also drop. How can anyone complain? All right, so this is what I'm actually showing here. This guy is telling you, hey, come on, inflation did come down, you know? Now, of course, they forsake what has happened throughout. Now, we're trying to explain that recently lumber price came off, copper price came off. So now the market is telling you that, hey, you know what? This price came off a bit. So it's not inflation. But the problem is lumber price was from 700 goes to 1,400 at one stage. Just double the amount, just like 2 years ago. So the thing is this, recently from 1,004 to 1,001, the market focused on that drop, but not the entire movement. So that is the reason why, if you ask me, the inflation is coming down. Yeah, if you look from this angle, but look at from the broad-based angle, then of course it's not, right? It's incredible. Okay, so why do we talk about inflation? Obviously, this morning we talk about the PCE data. Now look at the PCE data. Oh my goodness. Now look at it for since how long, man, my friends? Look at it. This is really ridiculous, but we know it's happening, but we are not going to do anything much on here. Now, since back in 1992, okay, in 1992, on 1991 to be precise, right, 1991, 1992, okay, the PCA data have been going down all the way and they reached a low of about 1, okay? Okay, then after that, they've been bouncing around for the next 20 years or so. Okay, and suddenly, all right, What happened? Wow, look at it. This is the problem when you pump in so much money into the system. So immediately, we just spent a 1.5 year, we saw the PCI data shooting past from 1 all the way to 3.3. And you look at it again, this is by 30 years ago. Oh my goodness. So the question is this, okay, we're not high. So would it be pumping down? Well, if let's say the economy is doing well, more supply is available in the market, then definitely this thing can come down. But if you're going to keep on pumping money into the system and the economy is not recovering, that means the supply is not able to overwhelm the demand, then obviously the demand is still going to be there, and hence the inflation will stay up. You must understand that is how it works, because we must understand that the current situation is that first of all, the world economy is not recovering. Second of all, itself is very, very clear, and unemployment data is still at the higher side, even though it's not at the high back in pandemic time, but it's still above the pre-pandemic time. And of course, the current COVID variant, the Delta Plus, all these are running around. People getting worried. So this is a problem here. I can tell you this, seriously, I expect it to go even higher, and there's a possibility that it can go even to the 4% mark. And if that really happened, seriously, we're in some certain trouble. So that is what I'm seeing now for this. But of course, is the Federal Reserve busy on this? Well, apparently when I look at the non-mainstream media, when it comes to the non-mainstream media like, Market Watch, CNN, really non-mainstream in a way, I realize that they cover a lot on the PCA data. They cover a lot, okay, a lot. Right, even CNBC was a little bit, okay, but the majority was done by the non-mainstream. But when I actually look at the other thing like CNBC to cover check for more, I don't see that. I check on Bloomberg, I don't see that. I check on these writers, I don't really see that. Meaning, right, they just basically talk about it and just move on, okay? There has no big coverage. Now, it seems that, right, the mainstream media are not going to talk about this, and because in their matter is that it's transitory, so which means that they don't really need to cover that much. So that is a very interesting thing about how the media plays a part in our life. They can control whatever they want to tell you so that you get very excited over certain thing and you get really nonchalant on other stuff. So that is the reason why I say that you need to have a balance of everything. And I have done the homework for you. Let's see, I purposely go and keep PC, Bloomberg, PC writers, and I can tell you this, I really don't see much coverage, from the big boys. So this tells you a lot of stuff in the market, okay? All right, but of course, there are people like the Boston Fed President Eric. Now, he came in to drop some uncomfortable truth bombs and say that he's pretty worried about the froth in the market. And the worry people will assume very easy monetary policy is near this permanent, right? That is what he's fearing people think of that way. And it's not half surprised with the high asset valuation. And of course, to close it up, he says that, right, it's time to think about how quickly to remove the accommodation. It's time for the federal to think about pulling back support. Now, this is something that you must understand. Give an example. It's like a child, okay? A child being, being basically taken care of as he rides the bicycle, right? So every time when the child moves to the right side or left side, right, about to fall, you quickly go and hold that child. So in one sense itself, right, the child won't be hurt. But on the other side, the child takes a very long time to understand how to ride the bicycle. Don't you agree with that? So it's only actually the falling on the sides that probably have some bruises that's going to make this child learn how to ride a bicycle. It's just like putting the stands, the rollers at the side, and then after that, expect the child to ride a bicycle on its own. That is going to be a fake because it's all the support, right? Only when we remove all the support, all the wheels at the sides, then that is where the child will fall. But it's after this falling, the child will understand how to balance it properly, and then ride the bicycle. Do you agree with that? All right, so what is happening right now? Federal Reserve is doing that. It's basically trying to make sure both sides, left side, right side, all being taken care of. But if you to continue, people would not be able to do that. That's the reason why so many youngsters are still now prefer to trade stock, prefer to stay at home to get their money. Because since I can, if I work outside, go through pain, I make $1,000 to $1,005. I stay at home to trade the market, I make $5,000. Why should I even go out to work, right? So that is the problem that's happening right now in America. And of course, this is what's happening. So with that, all right, remember I told you guys that this trend line I built for you last week. And I tell you that, right, if the market stays above the trend line, we could see a much higher level, we could see the all-time high being breached. Okay, and what we saw on Friday, the market really beautifully went above the trend line, stuck above the trend line, and touch it and recover. So this tells me that, right, the market could be going to the all-time high. But on the flip side, because it was a gap up, so the thing is this, take my note, the market cannot come down, because if the market come down, we're going to see a real selling off coming in very soon, because the downside pressure is still there. And of course, if the market loses this so-called technical point, we could see some selling. So this technical point on the cash market is 34,354, this cash market. So we're going to see very big movement coming up. So today, I'll prepare for you the bull reasons and the bear reasons for you to go long or to go short. Okay, so we're going to stand by for this. Okay, ready? All right, let's go. All right, so the thing is, before we start this morning, every morning I will give you the quote of the day from a very successful trader. This is Bruce Covenant. All right, this guy itself is a legend by himself. He's a very good trader, a very power trader. He trades almost everything under the sun. Right, novice trader trades 5 to 10 times too big. They are taking 5 to 10% risk. On a trade, they should be taking 1 to 2% risk on. Okay, what I'm trying to say is this. All right, as a rule, when you start trading, never risk more than 1 to 2% of trading account on a trade. For example, if you have $3,000, you should never trade more than $30. That means a very, very good risk management we will be emphasizing, and about 1% rule. All right, that's why for our TTT trading, we also go by 1% to or lesser. Because that is very important, because you need to basically protect your capital so that you will have that capital to trade when the time arises. Not every day will be a winning day. I mean, I'm seriously telling you yourself, right? I don't believe that every day can be a winning day. All right, especially for a novice trader at the start, it's going to be very difficult. But if you basically can keep on maintain this risk-reward ratio concept, and when a big day comes and you're going to ride on it, that's where you make a lot of money. And at the end of the day, making money is a primary bottom objective. All right, isn't it true? All right, so people, please understand this. That's the reason why we emphasize a lot on this risk management, okay? So what are the reasons to stay bullish for now? Okay, let me bring it to you. Okay, just give me a moment first. I just read something is not done properly. Okay, cut. Okay, so what is the moment? Just give me a short moment on this. Something. Okay. Okay. Here we go. Okay. Settle. Okay. Let's go. All right. Now, why is the U.S. stock market, stays up? What is the main driver? There are 3 reasons for that. Okay. First of all, now Joe Biden has really done a lot of, he basically come out a lot of plans, and I think it's pretty good. But because he knows that the Republicans will give him hell, so what he do is that he will always bring it, this is by demand, then eventually the Republican will just come in to just cut him off here, and he will try to accommodate to where they want. So you realize he's a pretty good negotiator, and he really will give in to what the Republican wants so that he can get the thing go through. So undeniable now we have this thing between the Democrats and the Republicans. They are able to come up with this so-called infrastructure cleanup. And that is the reason why people are getting a bit confident, getting a bit positive with what's going on now. So that is the reason why even Rob Hoffman says that, right, it is a very good historic bipartisan framework. All right, that's pretty good. So that's the first reason. Then, of course, we have Federal Reserve who keep on telling people that, hey, you know what, I'm very confident, nothing will go wrong. And even telling people that even inflation there is, don't worry, transitory. There's no reason to be panicked. And eventually you come back down and the economy will shoot up. So they gave a lot of confidence booster, and obviously the stock market up, right? You see, the thing is this, as long as the stock market stays up, no one will complain anything and no one will say that they are wrong. The only point is that the stock market has to come down, people loses money, people get upset, and then the finger pointing will come. So that is the reason why I can tell you this. The only reason why the stock market is up because the Federal Reserve is holding up at the same time. So as long as they hold up this stock market, no one will complain. And of course, last but not least, we have the banks. Now, the Federal Reserve gives the US bank a thumbs up as 23 lenders easily pass the 2021 stress test. So I really wonder how they pass. Obviously, it's all the money that is available in their bank reserve. So all this thing tells you that from the infrastructure to Jerome Powell, to the stress test, all these are the reason why the stock market is going to be staying up. Okay, so these are the bulls reason, all right, the reason for the upside, all right. And of course, with that leads to confidence, and confidence leads to money. Now, apparently from data from Refinitiv, Lipper came in that investors put in a net $16.1 billion into the US equity funds in a week to Wednesday. So you look at it, this is the equity fund. You see the one in red is equity fund, and look at it. Wow, this is actually the highest ever inflows to the markets last week. That's the reason why we saw the NASDAQ, S&P going up. Okay, now where the money? Okay, if there's some people going up, where the money market now? Apparently, funds are moving away from the money market, which is treasuries. So the question is this: okay, previously they were in treasuries. That was in 26th of May back then, period of the week. Then after that, now they change away. So is it because the stock market will go up again? Well, based on what we are seeing now, it is very possible that the stock market could be going higher again, or it could be telling you that, hey, you know what? If the market have been pumping by these funds itself, right? Is it because really they are very positive in the economy, or is it because they are just coming in to don't miss the ride? So we're going to leave it down there, but at least you can see right now very clear is because the funds came in. Now, of course, if the funds came in, where did they go, right? So look at it, the green bar, you get the info technology. That's the reason why the NASDAQ is up. That's why the last week, infotech is up, and real estate is up, and utility is up. The only one that came off is actually financial, and that is actually pretty worried, because I did tell you that when the financials are getting out, right, it's not a very comforting sign. But of course, we saw Friday, we saw the bank shares all going up because obviously the stress test they passed, and when there's some buying. But the question is this: all right, can this sustain? That's another. All right, so now you can see very clearly the equity growth funds are getting a lot of attention, and the equity value funds are actually losing confidence. All right, so all this tells you that traders are looking for higher return. They want things to be, able to get fast rewards, because they know that the market is kind of high at the moment. But of course, as long as everybody stick to one particular side, things will go up. So overall, you can see fundamentally seems to be all positive, and there's ample of funds running into the stock market. That's the reason why the stock market now is still pretty bullish at this moment right now. Okay. All right, so the large cap funds attracted 13.4 billion, the biggest inflow since January 2018, while the mid cap and small cap lags behind. All right, so this is really incredible, right? This is really incredible. Big numbers are coming to the market. So now you have seen the fundamentals, the inflows, and now let's move away a little bit, go to my projection. Now my projection for July for the equity market, I kind of suspect that there'll be high upside potential now. So the thing is this: how did I actually get this so-called forecast? Now, obviously, I told you guys I went for the seasonal pattern, and let me explain to you how does this seasonal pattern works. Okay, hold a minute. There's some PowerPoint issue. Hold on. Okay, just give me a sec. Okay, so now this is the S&P 500 monthly seasonal pattern since 1928. 1928, no? That is about 91 year of data. Wow, 91 year. Okay, so in short, you are seeing that, right? Normally in June, the market will still end positive, but in July month, wow, usually it's up by 1.58%. Usually, wow, 1.5% on average, okay? So which means that you look at it carefully, usually July month will be a good month, okay? July month will be a good month. That's the reason why. So with all this fundamental funds flowing and seasonal pattern, okay, look at one more, and the one more would be this. This is the presidential cycle year one. That means that, right, when this the first year of the president coming in, all right, you can see that the month of July is usually one of the very big one. The second off to the April period, 2.28% on average, okay? Now, the only thing is that if you look backward now, I did say that come to August and September, we could see profit taking and there could be heavy selling. So how did I get that? Well, apparently, I say apparently, you can see the data over here. Statistics seem to be showing, and even the presidential cycle year one is also showing the same thing. So that is how and why I say that I can give you a brief forecast of what might happen in the market. So the question is this: are we going to have a pretty decent month of June month? Well, I'll talk about the chart later. but do note, based on the chart pattern, July could be a pretty good one. Okay, so that's the reason why staying bullish on the market in July could be a good month. So now you're about a few days away from month of July. Are we going to see some profit taking first so that you can buy deep and cheap at July? Well, it's all your take. Okay, you guys make your call. So what we do is that we take all the data and put it into percentage form. You can see that, okay, to make it simple, what I explain to here is, in the first 10 days of July, it's a very good positive ride. Then the second half of July, maybe it's time to take some profit, and August continue, and then September, you can be careful, should be careful because that's where the selling is. All right, so if this is not going to happen on the vice versa side, then in a way, okay, listen to me, 1st of July to 15th of July, if the market is not strong, then usually the second half of July will be pretty strong. Okay, all right, that is what will be happening for July period. So of course, these are all seasonal patterns, statistics. So we're going to just use it as a pinch of salt, okay, and just remind yourself, okay, for the month of July, if the market is not going to go down, then it'll be going up. Okay, pretty cool, right? So you see a lot of stuff, and all these data are from Bank of America Global Research. Okay, so this is not like I bring it out of nowhere. These are real stuff that I dig for you and present it to you. Pretty cool, right? Yeah, indeed. No one does that in the market. So Bank of America technical analysis show this beautiful chart. Looks very nice, of course. This is what happened, and they say that, okay, look at the chart right now. All the channels, moving averages, Fibonacci, extension, everything. All right, come and handle. So everything tells you that there could be higher upside to 4,400 for the S&P 500. So if the S&P 500 go to 4,400, that means that the Dow Jones go up by at least 1,000 points from today. So we should looking at probably about 36,000 for the market. Well, all this is all possible if you think that it's going to happen, but the chart looks beautiful and it seems like it seems very well orchestrated to look towards this 4,400. So guys, this is from the Bank of America chart. Okay, it looks cool, right? All right, so later on the second half of the morning, I'll talk about my side on the other side, which is the bear side. So earlier was all the bull side. Now we talk about the bear side in the second half of MAO, which will contain the high quality and the junk bonds. Okay, this is something that you will see in the market, the SKEW Index, and of course the SPY, which is S&P market breadth. Now today, it's going to be a very powerful information sharing. You saw the July month sharing, now about the bear market condition. Okay, it's going to be cool. All right, guys, don't forget, once again, every Monday to Friday, daily, from 3 p.m. to 5 p.m., Susan will go live, and she will be giving you trading calls, and you'll benefit from it as long as you're a TWB student. Night session will be Monday, Wednesday, Friday. It's from 8 p.m. to 10 p.m. All right, so those who miss the morning session, you can join her in a night session. But night session not every day. It's Monday, Wednesday, or Friday. Okay, all right. Now, for local and global news, cover a little bit into the COVID cases once again. The reason why I want to talk about this COVID case, because you can understand, right? I told you earlier, the only way that it will will detract everything is that when the COVID continue. And if the variant continue to spread deep and wide, then of course, when the problem comes in, then we're going to have the same problem, which means that inflation will keep on going higher and higher, okay? So that's the reason why we talk about this. Okay, yeah? All right, clear? Okay, good. All right, so now let's talk about what is happening now in the market, like say in Singapore. Now we have still got double-digit cases for our COVID cases, but we have more cluster going around. That's why we need to be a bit more careful. But millions in Sydney wakes to coronavirus lockdown. That means that apparently on Sunday, there's going to be another lockdown in Sydney. And of course, in Russia, we have also a rise in Delta variant cases. That's why Moscow is report the highest death toll of any Russia city. And the Delta variant forces tighter restriction in Asia Pacific region. So you can see that, right? This is the only problem. So as long as Federal Reserve know that this is an ongoing problem, they keep on pumping the stock market higher, people will not be bothered, right? That is my point here. Okay, so that is what's happening around the world. But the one that really going to be very, very disturbing will be the UK COVID vaccine program, because now the Delta variant has surged, right? It means now it's a test case for the world. UK has one of the highest COVID vaccination rate in the world, that's true. Yet, it's seeing a surge in the coronavirus cases. largely attributed to the Delta variant that first originated in India. So what I'm trying to say is this, that even though you are vaccinated, okay, you may still get coronavirus because of the variant. And of course, you can see in the UK right now, the number has just shot up near to 10,000. Now, obviously, if UK economy is not going to do well, it will affect a lot of people. And of course, one other thing is that Europe will be affected, and that will be a repercussion to USA and Asia. So that is the thing here, and this is where it gets scary again. For one moment, it was pretty low. Next moment, it went up again. So people are getting very upset about this, and this is going to spill over if, let's say, the world is not able to take care of this. All right. Now, of course, with all these COVID cases ongoing, we can also take note that this week is going to be a very important week. There's so much big data with the consumer confidence, with the ADP, we have the initial jobless claim, and of course, this coming Friday, time goes so fast, right? We're going to have a non-farm payroll. Wow, non-farm payroll again. So it's going to be another week of ups and downs. So traders, you need to be on standby for this coming week, okay? So take note of that. Will we have a non-farm payroll live session? Well, most likely there will be one. Okay, so I'll update you guys as we go nearer towards it. Okay. Now the Dow Jones, of course, we still see upside because Nike did a very good job. In fact, Nike went all the way up by about $20, I think. So that is one single counter single-handedly brought up the index actually. So one is the good reason for that. So S&P 500 climbs to a new record high. And because bank shares came in to buy it up. So basically now the whole market move up. Okay. So as investors now bet that the higher inflation will be temporary as the economy continue to recover from pandemic. So I don't know how they get this recovery, but nonetheless, the Dow Jones went up, the NASDAQ race was so-called up initially, then it came off a little bit. But primary is that you can see Wells Fargo is up, PNC is up, JP Morgan, Bank of America is up, Nike itself went up so much, okay, 15.5%. FedEx came off a little bit, but overall, because of the FTSE Russell is going to be rebalanced, its US stock indices. So all this tells you that, right, the market seemingly is going to stay positive as long as the money supply is available, then there's no real concern, okay? All right, for news side, everybody seems to be pretty optimistic. All right, nothing much to be worried. Of course, only this one. This from Investor Business Daily says that the market really start to wane. I think that's the NASDAQ, okay? And I've been telling you guys for NASDAQ, be a bit careful. I give you my warning about NASDAQ, and I hope that you guys have paid attention to that detail, okay, about NASDAQ. Okay. So let's just cover what happened on Friday. Now, Friday, we saw the Dow Jones doing the same thing again. Now, the Dow opens between the two pivot. The KSI was red, although the red side is declining, but still it's a red KSI. So if the market stays above OP, it will go up. But once it hit KTR +1 to +2, all right, we're going to see some profit taking or some resistance. But of course, if the market can stay above OP and pivot 1, the upside will still be there. But still, again, for the KTR that's red, be careful. Now, the downside should be easily KTR -1 because the KSI is red. But let's take a look what happened to the market on the day itself. You can see that the market just basically couldn't go down, right? It stays around the opening price for quite most of the time. And then after that, suddenly there was a big movement. It was a BMB. That's a red bar. So ideally it's a sell, right? But the problem is this, before you can sell immediately, the market do a CCRY. And you know that the point is this, if the market, if the KTR rate, if the KSI rate, and normally KTR -1 should be triggered, but you notice that for the entire day, the market just couldn't go down to KTR -1. We know that the opposite will be true. And truth be told, when the market do a CCRY, almost immediately it went back up. And of course, it triggered beautifully at KTR +1. And that is where it got itself so-called resisted, okay, until towards the last part of the day. So that is the reason why when you see BMB, doesn't mean that the BMB, the next color change will be the trade. It can be the other one. So in this case, it was a BMB CCYR first, then after it became a CCRY case for BMB. So that means that there was one flip trade from a short initially to a long later on. Okay, so that's what happened yesterday, on Friday. And about the Dow Jones, all right. But this is very clear that the money is available. They can do anything they want, and it's happening right now. Okay. All right, so now that is what we covered for this morning. Let's take a look at the other stuff like today's technical analysis. Okay, let's take a look. Okay, so this is the Dow Jones chart on the conventional. So what we are seeing here is pretty clear. We have the MA30 that is here, all right, at 34,256, okay? Then, of course, we have our MLP for today. MLP is about 34,400, okay? So MLP, 34,400. So as long as the market stays above 34,400, I don't see any downside, okay? That's for the MLP area, somewhere around there. But for the MA30, that will be about 34,256. Now that is the MA30, okay? All right, got the idea? All right. Okay, so with that, that is the view. As long as the market can stay above the MLP, we should still be okay. Even though now it's below OP, right? As long as the market can stay above MLP, it's okay. If the market loses MLP, then maybe we can see some profit taking down to the MA30. Okay, all right. So overall, kind of still positive in the market. For the weekly chart, now the market has loses the short-term trend line. I suppose to remove it away, but I realized that on last week, the way it closes, it basically stopped itself brilliantly at the short-term trend line. So I'm going to leave it there for a moment just to see, because if the market couldn't go past the short-term trend line, it can actually come back down again. So there is a small potential that the market may be coming down again just to finish up the chart pattern. Okay, so we will look at it later on as the week progresses. So let's look at the Dow Jones right now. Let's just bring in Dow Jones. Now, this is the Dow Jones chart, and based on what I'm seeing, I'm not that comfortable. Why is that so? Now, the opening price is between the two pivots, so naturally, above OP can buy, below P2 can sell. But the KSI, you can see very clearly, is actually red in color. So which means that the market is going to be prone towards the sell side. And the downside potential for today can go down to pivot 2, and that's 34,320, all right? Now, of course, again, based on what I just shared this morning, doesn't seem to have much reason to sell, right? So we will see how it goes. Now, this morning, last Friday, the market closed above the KHRL. So likely today, the market will go up, and indeed the market has already went up. So the question is, will we coming down? And now it seems like covering the gap. So there might be a touch of the gap and then recover again. We look at OP clearly, okay? But of course, the upside will be limited to KTR plus 1 to KTR plus 2, okay? So traders, just kindly take note of this. All right, so that is the Dow Jones. The NASDAQ right now. The NASDAQ is the one that I mentioned last week that to take some profit because the NASDAQ doesn't seem to be able to give me the type of feel. And fundamental, it doesn't look that positive. Now, MLP for today's NASDAQ is about 14,357. So what does it mean? That means that if the MLP is going to hold forward, you have to hold about 14,357 range. So which means that it has to stay above this 14,357. It has to stay above, okay? Now, in terms of the moving average MA, right, we are about 14,025. So current price now is way above the MA, so there's no much reason to be worried about. Okay, just that you can take some profit, but if you turn short, you need to be very careful and do your risk management. Now for the NASDAQ, well, NASDAQ, this is the TWB chart. Now the NASDAQ, we have a zebra earlier, right? I told you before. So as long as NASDAQ stays above OP, it's going to go up to 14,472. But if it goes below the OP, then 14,332 could be the pivot 2 to watch out for. Now there is a fine. Oh, thank you, Koh Hwa, for the coffee once again. Thank you, Koh Hwa. All right, again, coffee. Yay. All right, black coffee. Okay, thank you. All right, so the NASDAQ has to stay above OP and pivot 2. If not, there could be some profit taking down to the zebra top level, and that's about 14,225 area, okay? But at the moment now seems to be still okay, so let's just leave it alone. And the S&P 500, now S&P 500 is now at the new all-time high level. And this morning, the MLP will be somewhere around here at 42.76. So as long as 42.76 is stable, 42.76 is the MLP. As long as it's stabilized around there, the downside will be limited. The MA30 is about 42.32, so quite a distance away. So there's no reason to be having a panic button press. Okay. All right. So that is what we are seeing right now at the moment for the US equity market. If everybody is clear, please key number 1 right now. Or NASDAQ opening and MLP stack today. Oh, okay. Let's take a look at that. Okay, I just draw the MLP in the pink line, and we just look back at what this Eric had just mentioned. Let's see what's happening there. Okay, Eric, what do you just now say? Sorry again, I missed out. MLP and OP stack. Oh, okay. Okay, somewhere around there. True. Okay, so we're having this little stacking movement here at the moment. Yeah. Okay, thank you for sharing. So the MLP, all right, the MLP and OP, MLP somewhere around here. Yeah, indeed. Let's look at the market again. Yeah, it's very near to the opening price. So if the market breaks below the OP, then I believe that we're going to see some selling on the NASDAQ. I repeat myself, if the market starts to go down, then there is a possibility for the NASDAQ to come down to 14,332 level, okay? All right, thank you for sharing that, this Eric, good one. Okay, so that is what we have. Then let's look at the China market now is now at a very important crossroad. It has tested the MA30, but it failed. And now it tested the MA200 and it seemed to also fail. So now we have a problem. If this is going to be ending downwards in this case, then there could be some profit taking for the China stock, okay? But at the moment now, it's trying to fight its life above the MA200, right? So we'll take a look at this later. Now for Hong Kong today, we just have news from Sister Cynthia saying that Hong Kong, there's some problem there to the weather, and there's a Hong Kong at the moment now, it's not really open, right? Yeah, indeed. So we will update this later on when Hong Kong is made available for trading. At the moment now, it's not there, okay? All right. And the last one will be Nikkei. Now Nikkei, let's take a look at Nikkei first. Now Nikkei this morning is trying to stay above the MLP, but it failed. And it's trying to, at the moment now, try to stay above the MA30, which is quite clear right now. So as long as the Nikkei don't break below the MA30, there's no real concern for this. And of course, I mentioned to you that for time being, okay, the market overall for US equity market, everything looks all positive. The fundamental is there. All the money is available. So the downside will be very good. But if there's going to be any downside, that means that there is this what we call it, the big boys are offloading what they tell you to buy. And that is actually one of the highlights that we need to be careful as we proceed down the road this week, okay, before the non-farm payroll results. Okay, traders, got an idea? Okay, all right. So we have covered everything now. DAX, let's do a look at DAX. Now, this is the DAX market, and of course, this is not very, very good. Okay, so let me just give you my 2 cents worth. First of all, MLP for today is at 15,621. And this MLP and the MA30 is very near to one another. So what I'm trying to say now is that if the market failed to stay above MA30, we should see some profit taking, okay? We should see some profit taking. So traders who are in DAX today, if the market cannot stay above the MA30, which is 15,600, then we should see some profit taking downwards, okay? So Uncle Arun, are you here this morning? All right, 15,600. Now, of course, for those who are parents, you know that today your kiddo from primary 3 onwards, right, they had to go back to school, and that's why my schedule a little bit difficult to plan. So I will do my plan with my wife. I see how can I arrange. So at the moment now, we definitely the morning MAO will start around 9 o'clock for sure. Because I need to send my kid to school. Then I will take my bus down here and stuff like that. I try to have the MAO by 9 o'clock. I will let you know what time can it be done. Mathematically, it should be able to that start at 9 o'clock. Okay, let's see how it goes from there. All right. But if not, latest 9:30 lah. So apology on the late timing, but we have to do our parents' duty. All right. Okay. All right. So this is the whole call on the equity market. All right. Hopefully you guys understand what I'm trying to say. Okay. Let's look at the commodity market, which is a gold. All right. Now gold for the entire week, we have spike up movement. Every time it hit to 1790 to 1795, it came off. Right? It seems to be telling you there's a very strong resistance at about 1790 to 1795. Now, of course, the question is this, whether gold will continue to go up. Now, apparently, this is the news I got, right? Apparently, there is some bearish feel right now in general. Most of them are saying that there is some support at the bottom, but the optimism to buy not there. But until then, I saw this thing here from Straits Times yesterday. US gold coin sold for 25 million. Oh my goodness, how can they sell one coin for 25 million? So I began to read on this, then I realized, okay, so it was a 1933 gold coin. Okay, 1933, obviously, ask Benedict, he'll tell you very clear. That was the year where Franklin Roosevelt removed the United States from the gold standard, okay? All right, that was what happened. So 25 million Singapore dollars, US dollars is 18.87 million, okay? All right, so this apparently, okay, describe this 1933 double eagle, the last US coin made and intended for circulation. All right, it's one of the world, it's the most coveted coins in the world, okay, because it's the only one that's available for you to circulate, apparently, okay? So this is actually worth $20 only, okay? But because of the auction, it's worth now $20 US dollars, it's worth 18.87 million. Oh my God. Okay. Now the pre-sale estimate was about 10 to 15 million. All right. It was never expected to cross to the $18 million mark. So it was, then there was a bit of history. It's just say that it was gold coin was taken, gold standard was taken away. Then this coin called the double, this is the double eagle, right? Double eagle. Then it will appear in the market. Then after that, some secret service came in. Then they will rule out. Then they will make illegal to own it. Then after that, it was again back to the collection of an Egypt king. Then eventually it was not there. Eventually it was a lot of history lah. So in short itself, finally this particular coin is available and accepted that to be the only one. So that's the reason why it becomes so expensive. Okay, so this coin is the only 1933 double eagle allowed to be legally sold. Okay, so that is what actually happened. So I'm sure in between a lot of politics involved lah. But whatever it is, all right, that this tells me it signifies to me that gold price, our gold coin has this value. All right, so this tells me that it's just a matter of time. Gold will go up. All right, this is a bit of optimism that we want to see from the market in general. But of course, gold price is not off now, right? It doesn't matter. End of day is that, right? This is the type of things that we need. As long as the general public is still very optimistic on gold, this is something that you can consider to watch out. Okay, so like you take a look at this, how the double eagle looks like in a zoom up in fashion. Look at it. Okay lah, I don't know how to appreciate this, but this costs 18 million. Obviously, I don't mind the money. Okay, so this is the 1933 double eagle gold coin. All right. Okay, so let's look at the chart. Okay, the holy from the market can get some coins. Okay, now for gold, you can see that it's sideways for the 5th day in a row. So the question is this: how come the inflation is up, but yet gold is not going up? Because I thought inflation and gold goes in tandem, right? So apparently, recently it doesn't seem to be that way. That is a problem. And why? If you talk technical analysis, you can see very clearly the boys are definitely in the selling mode. And the KCX tells you that the selling potential, the selling pressure at the moment now is still pretty high. So on Friday, when the market opens between the two pivot, right, it's pretty clear that it's either going to go to pivot 1 or pivot 2. Now, by logic, it will go to pivot 2, right, which actually it did happen. Look at the low of the day, 1773. It missed by $1, and then it went up. And the high, it was predicted at 1787, which the high was 1790. So the market did went up. So one thing in trading at 24, if the market is supposed to go to a certain level but it failed, then the opposite will actually happen. All right, so let's take a look what happened. Now, throughout the whole entire day for gold, it's been sideways, 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 until, can you see this guy here yourself? This guy's a BNB. And this BNB came with a color change, CCRY, and that's where it couldn't go down, it had to go up. So it went up to KTR plus 1, that giving you the first profit. Then it went sideways, and it tries again. And this time around, it even go to KTR plus 2. But as you know, the day chart KSI is actually red, and we said this before, and you can see from the chart, the market did a BNB right here. Can you see that? And it followed by a CCYR, and that means that this entire CCYR triggered KTR plus 1 with the KSI day chart is red. Then, of course, with this zebra inside, everything comes in together, and of course, gold came back down. All right, so that's the reason why I keep on telling you guys this. You're going to be a good trader. You don't only do your homework, you must also prepare what you look to trade in the market. And of course, the argument you may say, Cal, but earlier here also got CCYR. How come it didn't go down? Well, if you look carefully, there was no BNB for this CCYR compared. Okay, there was no BNB. Now there was once over here, but immediately it was stopped out. And obviously, when it stopped out, right, we had to accept it. So the first trade over here, you may not make money, but the second trade here, you would have made the money because it was a trigger of KTR plus 1. It's a trigger of pivot 1. So all KTR plus 2 and pivot 1. So two trigger that happen together. Obviously, the impact will be strong, and of course, the market proved by itself. Got it? All right. So if those who got it, please key number 2 right now. If you got it, that I know you know as what I was sharing. You understand that? Please key number 2 right now. You know, never like my life, I would think that we drink kopio kosong. I never think of that, but you know, kind of like understand it. Why is it important? So you have your caffeine, but you got the sugar. Okay, thank you guys for your participation. Thank you. All right, so you guys understand, huh? Okay, let's continue. All right, so with that understanding, let's look at gold today. Okay, let's look at gold. Okay, now gold, we have a bit of issue. Now gold is now trading below the MLP for today. MLP for today is 1778, and gold has went below. Okay, now gold is also below the MA 200. Gold is also below the MA 30. Gold is also now below the 38.2. So basically, gold have a bit of problem. The downside pressure is definitely there, and it's marginally away from the 50% mark for the Fibonacci at 1761. So with all this thing tell you about gold that's so bearish, right? Obviously, immediate reaction is like, okay, let's sell gold down, right? Well, I'll put it this way. Yes, you can do that. But on the flip side, you can consider that with so much downside pressure, if one day, if gold finds strength and recover, then there will be a lot of upside. And I tell you this is how the algorithm works, okay? So I will say this, my friends, at the moment now to buy gold will be very dangerous, and unless you're willing to buy it cheap or buy it when it drops. So at the moment now for today, as long as gold stays below the MLP, there isn't a good reason for you to accumulate gold. All right, I mean to buy gold. If you're going to do accumulation, of course, any price is good. So if you're going to ask me any good price or good, right, I still tell you this, 1761 is the 50% level of gold that one can look and consider for accumulation, and you must hold it for some time. But if you follow by the rules, then you need to have it to be triggered first, and then the CCRY has to be displayed before you enter the market. Okay, so that is one level to watch out for. If you think that the gold will go down really, really tough level, then of course the 61.8 will be the best level. That's 1669 level, all right? That means 1669 will be the level that the 61.8 will be. So that will be the level that gold could be going down if the market really, really sell down. So I tell my friend this, I said, look, the equity market back then in year 2000 and 2020, remember, that was whereby you have the pandemic time. And when the pandemic happens, the equity market fell and gold got triggered and gold came off quite a fair bit, right? So let's just do something over here. Okay, let me just do a little favor. Take a look here. Okay, let's watch this. Okay, remember the time, the pandemic time? You see this? This is what happened, right? So you look at the pandemic time when the gold was trading about, let's say, 1,680 around there. Then after that, when the pandemic happened in 2020, the equity market came down. Gold also got triggered. It lost the MA30. It lost the MA200. And of course, it came down quite a fair bit, right? Remember that? So that time, many people say gold is going to crash. Gold is going to be right off and stuff. We came in and say, no, gold is a good time to buy. If you look carefully, this is a BNB. Can you see that? The thing is this, the one that basically bottomed out was a BNB. So with BNB involved, you draw the two lines and you know that the market is below MA30, below MA200 where people want to sell. You notice that once it crosses the MA200 and crosses the MA30, the market went ballistic. Okay, and from this point, gold went all the way up to even the new all-time high of 2,074. Okay, got an idea? Okay, cool. Now watch this again. So at that point, I'm trying to say is this, at that point, the gold price basically from this 1,680 dropped all the way to 1,450 range, okay, down 230 points. But when you lose the MA30, it was about probably 1530 level. So it dropped by about $80 from the MA200 to this 1450 low, dropped about $80. So it was $80, right? $80, let me just bring my calculator up. $80 of $80 divided by 1450 is about 5.5%. Okay, 5.5%. Okay, so with that understanding, if we go back to current time right now, okay, today the gold price is at 1,774. So if I multiply this by this same 5%, I'll get a number, and the number is 1,683. Okay, I'll show it to you. 1,683. Okay, 1,683. So that means that 1,683 is actually very near to 1,683. Yeah, is very near to this point here, 1,688. So that is where we're looking at. From here, downside, let's say a 5% mark, okay, we will see about this point here. So you can see actually mathematically it's all around there. So if gold price, if you ask me, is that a price that I die will buy, then of course it'll be between 1,683 to 1,689 level, right, at the so-called sure will buy level. But of course, we're going to see still there's some support here at 1,761. Okay, so got an idea? Cool. All right, good. Okay, so with that, that is the conventional. For the weekly chart, doesn't look that positive, so there could be some selling. For silver, obviously now we can see very clearly for the third time in a row, silver has got stuck at the MA200 level, right? Silver is actually available to trade with AIM side, and silver indicator is also going to be made available soon. All right, we are doing the last final testing. If it's once available, right, you can contact Ben to subscribe for it. Okay. All right, from the 1st of the month, 1st of July. Okay, I'll let you know later. So again, I always tell you guys for gold silver, then 25.38 will be the first level to watch out for. But I will still prefer to buy anything below $25, and that's about $24.80 level. Okay, anything below $25, I think to buy silver is a pretty decent price, because at least when you go upside, it's about 100%, right? So I would rather buy silver around this point. Okay, yeah, indeed, around there. Okay, silver. Okay, so we have all this, and let's look at the market. Okay, now for today. Now this morning, today, we don't have a very nice movement on the gold price right now. The opening price of gold today is between the pivot 1 and pivot 2. But because the KSI is red and the blue bars still extending downwards, so we know that the gold price will go down to KTR minus 1. And of course, those people who attended my gold challenge on Saturday, you will remember that I told you how to use KSI to your advantage, right? And if you remember the rule, you would have made money today, right? You look at it. Look at it. The market did a BNB right here, which constitutes the CCYR as a whole. And I told you, you come down to KTR minus 1. And indeed, gold price really dropped all the way down to KTR minus 1. Just like that. You see, guys, the gold challenge during the session, I did tell you how to use KTR with the KSI. And I tell you this, the probability of making money on a day-to-day schedule is very possible. And I show you live. And that was Saturday. And today, it has manifested. Don't you realize that? Those are people who remember that I shared this with you on last Saturday during Gold Challenge, please key the word REM. Those who actually attended my last Saturday sharing, I told you how I use the day chart KSI to trade with the KTR, intraday KTR. Remember that? If you remember, please key the word REM right now so that, people can see that whatever I say really makes sense. And of course, did I profit from it just now? Yes, I did. All right. Not that difficult, right? It was a pretty simple thing to do. You just have to follow the charts. All right. The charts don't lie. You just have to follow. All right. Cool. Wow. So many of you remember. Excellent. All right. So did you make money? That's more important. Those who say REM, you remember, did you make money? That is more important. Okay. Those who have REM and remember and make money, please key the word make money. All right. If you have made money, please do that. Okay. All right. That is the whole joy of this. The point is this: end of the day, if you guys make, I'm not going to get a cut from there. As long as you make, I'm happy for you. That is the bottom line. Okay. Now the question is this: how low can this go? Well, it depends on where the gold will stay. If the gold stay below the OP mark and below P52, there is a chance that it could go 1763. So I'm going to say this up front. If gold stays below the pivot 2 today, we could see 1763 traded. All right, 1763 is the KCB level. All right, if you don't want to go for 1763, you can go for 1764, just marginally above the KCB mark. Okay. All right. Very good. Wow. Anthony, Eric, and Jerry all made money. Excellent. That is the point. No point attending class and don't make money. Then that will be very pointless. Okay. All right. So this is what we have over here right now for the gold market. All right. So that is all. There's something more I can share with you. Yeah. Okay. That's about it. So now how about crude oil? Let's take a look at crude oil. Now, crude oil is really a runaway and it's still running away. All right, crude oil until now has not had a severe pullback. The one that we saw, one chance is went to $72. Then it pulled back all the way to $69. One chance only. If you miss that chance, then you see the market went up by $4 already. So for crude oil, like I say, we could see another chance coming down again. All right, that look at it now. It seems to be kind of resisted at $74. So there is a possibility for the crude oil to come back down to this point here, and that is about $70.81. So that is the MA30. All right, this This MA30 level is about $70.81 or 80 cents. I'll make it easier. So what I'm trying to say is this: if the crude oil do come down, touches the MA30, and if it stays around there, this will be a good time to look for a buy if the rules allow you to do like CCRY and stuff like that. Because I'm still looking at crude oil to hit about $78 to $80. Now, I still strongly believe that, okay, $78 will be a better price that I think that it will reach versus $80, because the $80 is what a lot of boys are calling for it. Many retailers are calling for $80. And you know, when all of them call for the same number, right, usually that number may not really comes. Okay, so $78 will be a preferred choice. Okay, all right. Okay, this is silver. Okay, all right, so that will be all for the commodities market, and I covered that too. We're going to go into our this alternate market views. This one, this afternoon, this one, we have a lot of important and crazy stuff to share with you. So guys, if you want to stay on, you can stay on. If you think that you've heard enough, all right, you can actually leave. I'll come back in 15 seconds time. Okay, all right, thanks. Okay, guys, if you are back, let's continue to the alternate market views. Now, this today's sharing gonna be a little bit extreme because this is what I get from the market. So please, before you really get into high on the sharing, please make sure you do risk management. Okay, so to prevent people from misunderstanding what I'm gonna say next, let us all key risk management here. Key RISK space MGT. All right, management, right, for short. All right, please do that. I want everyone to do that. There's 66 of you, right? I want to see at least 30 of you key the word risk management, RISK space MGT, because I really don't want you guys to be misguided by what I need to share later. Because what I share is what the data from the market. But if the stock market is going to be what they call strongly supported by the Federal Reserve, then there's no way you can win this game. I tell you this, what we are having right now is a very manipulated, construed market condition. It's just I told you guys, as long as the child is riding a bicycle and you're not going to let this child fall, seriously, the child will become, invincible, because he will think that nothing will go wrong. But it's only when one day you're not there to hold the child, and if the child really can't actually understand this, then the pain when the child fall will be very hard. All right, so that is what I'm seeing right now, and I don't want you guys to be, get to dwell over this and then after that go into a heavy position and get caught by the market. Because like I say, we can say all we know about the market, but if the market just want to continue to be insane, all right, there's no way we can stop this. Okay, so we have 27 only comments of 64. I need to have 30, so please, I need 3 more before I continue. All right, just make sure that everyone here understand the downside risk that may happen, but of course I also want you guys to be very careful. So I still have 27. Is it really stuck there? I think it's stuck there. I don't see any number increasing now. And of course, this is coming out 28 now. Okay, so it's not stuck. 29, 30. Okay, thank you. All right. Like I say, guys, I really want you to understand this. As much as my morning MAO, I really want you guys to, make money out of this. I also want you guys to be very careful with the potential downside risk. Okay, I'm going to click all the likes for you. Judy, you didn't follow rules. I say risk management, you give me a shortcut. Later you tell me what's RM. See, give you rules, so don't follow. But of course, you are driving now, maybe, so careful if you're driving. The thing is that I wish to know every one of you in person, but now, of course, we have no chance to beat up. Hopefully, only Mandy write the whole entire risk management power. Okay, Mandy, well done. Okay, all right. Good. I'm just clicking all the alert button for all of you to validate that you guys have heard me loud and clear. Okay, so let's go. So you can write risk management for yourself, meaning you must apply risk management. Okay, let's go. All right, now this is the VIX indicator. Now this is VIX indicator for the last 4 years. Okay, 5 years. Sorry, my bad. 5 years. Now, what is VIX? In case you ask me, okay, it's a measurement of fear in the stock market. Okay, and usually this is known to be the indicator that when it's down, that means the stock market is actually, the volatility is not supposed to be very big, and it's down usually means the stock market is on the way up. Okay, so you got an idea, not really inversely related, but in a way constructed in that manner. Okay, so apparently now, the VIX indicator I've been buying, and every time you buy, when it comes down, I buy, it went up, I take profit, came down, I buy, take profit. I keep on doing this, okay? But the only difference is I keep on lowering down my buy level because I know that Federal Reserve is trying to squeeze the market. So they will purposely jam break, make the low go lower. That is very normal positioning of a trader. They want to really go for it. Okay, so you got an idea now? So now we are at 15.61. The low was 14.2. Okay, it's not the lowest for the last 5-6 years, but it's definitely the lowest for the last 2 years. Okay, now you look carefully now in this VIX indicator. Every time when you have this compression node, notice that the low gets lower. All right, and then suddenly out of nowhere the thing will shoot up. Okay, got an idea now? So same thing again, the compression node is there, then suddenly it shoot up. Now what I'm trying to explain to you is this: we are now at a level that for the last 5 years, every time you get compression, all right, apparently there will be a point it will just shoot up. And usually this shoot up, right, is because of some news in the market, some very unexpected news. Okay, so of course, back then in year 2020 we had a pandemic, and back in 2018 was the so-called the taper tantrum. Okay, so it must be something very big. So what I'm seeing here now is that it's more like a side bet now on like a hedge to tell myself that if, let's say, the stock market's going up at a high level now, it's kind of overvalued, so maybe I want to take a side bet to hedge myself, I can consider to buy some VIX. Okay, all right, no problem, Judy. I suspect you're driving, don't worry on that. Okay, then next time don't type. Okay, safety first, but thank you for putting your effort in, appreciate it very much. Okay, so this VIX indicator tells me that, right, it's just a matter of time. We could actually see something out of nowhere that could happen, okay, based on patterns. It's not 100%. It's just like basically telling you that, you know, that you will be rich one day, but I don't know which year is that. It could be year 25, 50, 99, you know, or something like that, all right? So this is something that you know, because when I see this, now this is not actually, well, in fact, very, very little people cover this. And again, you know, I read a lot, and I watch a lot of YouTubers' videos to get a lot of their insights, and that's why I want to share this with you. Now, this is TLT/JNK. So what it means is the high level bonds versus the junk bonds, okay? The high quality ones, okay? High quality. So what it's trying to say is this: when this chart is coming down, right? That means that people don't mind taking risks. That means that they don't mind taking risks, they don't mind taking junk bonds because they want the high return. What junk bonds when it's in demand is because people don't think there's risk. Okay, and because there's no risk, they don't mind buying because the return is higher, the ROI is given higher. So when this chart is coming down, that means people don't mind taking risks. Now, then if it stop coming down or start to break out, right, and you can see over here, when it starts to break out, that means that people now are getting a little bit worried. That means that people are actually not very confident with what's going on right now. And that's where you can see it happen. So the last time it happened was year 2020 when this happened. So now are we going to see something happening again? Well, based on the trend line drawing, it seems to be having a little bit of this, but still it's a bit too early to call. But one should be watching this closely. So it seems to be in line with the VIX indicator right now. It seems to tell me that something is going to happen in the next 1 or 2 months' time. So again, I'm not going to quote myself and do this at what will happen because, you know, I can't even know what I'm going to have for lunch later. So I'm just telling you based on pattern, this is really showing you that some potential stuff will happen, okay? And if you look back again in the year 2008 and 9, it was also the same thing. In year 2010, it also happened. So basically, every 2-3 years, this thing, when it do a breakout, right, that means that risk get into the picture, and that is where things changes. So now you got an idea, right? You don't really see this, right? I can guarantee you mainstream media will never cover this, okay? All right, this is really from people who trades and they basically do a bit of coverage, right? So you get this here live on our morning MAO. All right, now this is the SKEW indicator. Okay, let me just bring away the owner. Let me just use a PowerPoint. Okay. Now, SKEW indicator. Now, this is basically an index. Okay. Now, this index, let me explain this to you a little bit. Okay. The SKEW Index is a measure of potential risk in the financial market, much like the VIX index. Okay, it's a bit different. The SKEW Index can be a proxy for investors' sentiment and volatility, and it perceives a tail risk in S&P 500. Tail risk is a change in the price of S&P 500 or stock, So it's like basically telling you that if the numbers are actually going high, one must be careful. And of course, at the moment now, we are at the highest level for the last 30 over years. Okay, so at this moment now, right, you can see Goldman Sachs actually came in and summarized this. Okay, should the market sell off, it will be do so in a very volatile way. There's unfavorable asymmetric in the potential return, and stock will become increasingly correlated with each other in a sell-off. So what I'm trying to say is that Goldman Sachs also know that this actually happened. High SKEW numbers, low VIX indicator, high valuation. All these are the cocktail of a potential sudden, breakdown in the stock market. Sudden. So the question is this: what will cause it? But you look at what I just shared earlier in the market, right? With Biden doing such a great job now as a president in a way, and Jerome Powell, Janet Yellen, everybody is so positive. It's going to be very difficult for this to happen. Now, if let's say on a normal ground, without Biden doing all this, without Jerome Powell doing his and Janet Yellen doing all their little support in the market, seriously, the market would have tanked a long time ago. But because they are pumping out with so much money, basically you have one side screaming off their heads off the downside pressure, but the stock market is still holding up. So all I can say is this: the day whereby something terrible happened, and if let's say that so-called holding power loses strength or lose balance, right, then the torrid selling may actually really happen. Okay, so but the thing is this: before that happen, if you short the market right now, there will be a probability you're going to get whacked by the boys. Okay, so that is a point whereby I need to understand this: is that we are at a breaking point, but still the market is still holding. So you just be very careful. So at this stage right now, in short, if you're having a big position in the stock market on the long side, I would seriously advise you to just lower down your risk. Okay, lower down, take some profit off the table. Okay, and of course with that also tells me that you heard me earlier about the gold part. That's the reason why I'm kind of still hesitant to get my mom to buy too many golds. So I did tell you that I'll tell my mom to buy gold soon, but I still hesitant. I still think that there will be one more sudden spike down in prices. Then that will be a lovely time to buy gold. So all this technical level I mentioned earlier is right, like 1669 and so forth. You can consider putting some buy limit order or call level so that you can advise yourself what to do when those levels get hit. Okay, got the idea? Got the idea? If you get the idea now, please key number 3. Okay, if you're still staying on, 59 of you, all right, that's key number 3. Okay, all right. I will see how many of you key number 3. Okay, let me see whether all understand what I'm trying to say. Okay, well, good number of people key number 3. That's good. All right, continue. All right, now this is the one that there's some ambiguity here, but you had to follow me. Okay, now watch this. Now this is the S&P breadth. Okay, breadth. Okay. Now basically trying to tell you that, right, when the breadth usually means that the advance and decline chart usually is like that. Okay, so you can see. Okay, let me explain this to you. Okay, slowly. Now you can see that as long as the advance and decline, if the advance is going upwards, then obviously the stock market will go up, right? Okay, I got an idea. Now, what you see is that if the breadth is coming down, all right, that means there's divergence. Now you can see what carefully over here, there's a divergence, whereby the stock market continue to climb, but the market breadth is actually coming down. Usually that will signify some selling, okay, which you can see that happening, okay? Got the idea now? Okay, got the idea now? Pretty simple, right? Okay, so that is the first part to understand this. Okay, then I show you more example. Now this is what happened back in 2015, whereby you can see that the market breadth was basically coming down, the stock market was going up, and then of course after that there was some selling, okay, not a big selling, but there was some selling. Okay, got the idea? Okay, so you got the idea now for this. Okay, so now I bring you back more charts. Okay, now this is what happened in 2019 before the you can see over here, the stock market kept climbing upwards, but the market breadth moved downwards. And of course, we can see the market sell off. All right, so this is like a very short-term movement, but at least you know that you don't be caught at the top. So you got my idea? So that is what happened over the last few years. Then why am I bringing this? Because if you look at today's market now, we can see a terrible, terrible divergence. Look at it. My God, look at it. Look at the divergence in the magnitude of this market breadth versus the stock market today. The stock market today is still climbing new record high, while the market breadth is really ridiculously in divergence here. So what I'm trying to say is this: if you believe in what you have just saw, then we are actually having something like this right now, where there's divergence here and the stock market climbs. There's a matter of time, there'll be a pullback of significant. All right. But of course, if the market is continue this bull run for the last 12 years to even 13 years, then of course, after this thing, maybe after a pullback, the market will go for a new all-time high again. So what I'm trying to say is that we are probably now at a very crossroad of a potential sell-off in the equity market, right? It'll be suddenly out of nowhere. So from the VIX index, to the SKEW Index, to this market breadth, three of them, very powerful indicator, that tells you that to be very, very careful at the current market right now. So of course, we have Jerome Powell that's going to have his what they call Jackson Hole coming up on this in August. We also have Joe Biden now have really done all what he tell you about the infrastructure. It's all about implementation. So which means that right, this coming 2 months, all the this non-farm payroll data, inflation data, CPI, PCE data, all these will likely be the main highlight for this coming 1 month or so. But of course, traditionally, July month is used to be the best one, right? So the problem is this: so how can we do? If July month is a good month for the market, but Cal here, you're calling for sell in a way, that is a very, very misleading here, or very hard to understand exactly. That's why you need to follow the chart. If the chart call for sell, then you know that what's happening right here. If the chart call for buy, you have to follow the flow. But definitely, for sure, if this thing happening right now, the volatility of the market is going to be observed. That's the reason why Goldman Sachs already preempt people that, you know, we're going to see a very volatile month coming up for July, because you have two big things happening, the downside and the upside. So if you're going to ask me this, I will say that maybe like this, okay? Maybe if there's going to be some selling, it will sell down towards July and maybe early July. Then after that, the traditional seasonal pattern of July will kick back in again, and then July go back again. So that means that still July month could be still going up, but before that happen, there might be some selling first, so that all these the VIX indicator, the SKEW indicator, and this market breadth all can fulfill its rationale that to show you that the downside will be there, and then after that bottom up. You got my point? So that is the reason why these few days, I want you guys to stay tuned to the market, watch the chart carefully, and make decisive decision, okay? All right, got the idea? Okay. All right, that will be all for today. If you get the idea, I hope you enjoyed this session. Like I say, I always try to give you great stuff, new stuff, and I do a lot of homework for you. I took this homework took me about 2 days to, you know, get this up. So that's the reason why you notice that Monday, usually the sharing a little bit more powerful, because it took me go through a lot of YouTube videos just to do this. Okay, guys, hope you enjoyed this MAO, and I wish you all the best for trading. Okay, so cheers. Have a great day. I'll see you later at 2 p.m. for our afternoon MAO. All right, cheers, bye. All right, guys, don't forget to like the button, okay? Thank you very much. Appreciate that. Bye-bye.